Good morning, Wall Street winners. It is Thursday, June the 20th, and we are back into a new trading session later today. As we look at the futures right now, as we head into the open in just under 2 hours, we have all three of the U.S. indices in the green. The NASDAQ up the most at 0.6%, or about 121 points. But all three in the green, which is positive. If we just go back to the main headline screen here on the Bloomberg, we can see that a lot of talk around rates and different country banks. So Bank of England holding their rate steady, making no changes, and other banks really doing the same thing and pushing out those rate cuts further, even though the Bank of England has made a rate cut, as has the Bank of Canada, deciding to push the next cut out a little bit further. Concerns over consumer spending and the ability for discretionary income in the food sector, call it fast food retail. So McDonald's coming back with a $5 value meal to try to put a price war on and get consumers back into their restaurants. Concerns with Putin and North Korea having talks about alliances for supporting one another in military needs and ties should either one get attacked. And that's really the narrative of what we're seeing in the markets today. If we look at the Yahoo app for our trading and the stocks that we follow, we'll see that retail is kind of a mixed bag, some up, some down, but up for the most part within healthcare and retail. I think we'll see that these stocks are starting to climb back. If we look at Nike as an example and the 6-month chart, Nike hit a low in the 88 range back in April, May, and is slowly coming back up into the mid 90s. I'm a believer that Nike is going to be above 100, probably 105 to 110 by the end of the year, December, January timeframe. So if you're looking for about a 10% move or 10% profit, they do have earnings coming up in 7 days, so that'll be a good indicator. I think Nike is a really good bet going into earnings. If it does drop at earnings, I think it would be a really good bet, because I think it's going to self-correct there as we get into the shopping season ahead of the end of year holidays. Scrolling down further, we've got JB Hunt and CNR. Both have taken hits. Both of these stocks I'd consider maybe being at a discount right now and a good value. The price to earnings ratio is still a little high on JB Hunt, but if you look at the trading range and where this is in its 52-week range, I think as long as it continues to trade in this envelope, 55.60 is the bottom of the envelope that we've seen. Now, that could mean that it's going to fall a little bit more, maybe down to the 152, 153 range, but it should pop back up into the 160s. It just may take you, say, 30, 45 days to get there, depending on the volatility in the markets. And we look at CNR, another great company to own. CNR, one of the nice things here, it does pay a 2% dividend. Its price to earnings high as well for a railroad, almost 19 times, but a strong company and lots of potential for upside. You can see that it as well, over 6 months, it's down where it was about 6 months ago. If we look at the 1 year, it's closing in on, it's a little higher than where it was. It did dip down into the mid 144 range or mid 140 range. But this has a lot of potential to get back up into the 180s by the end of the year. Oil stocks seem to be on a bit of a rebound. So we've got crude up today, just 13 cents right now, but still up. It's looking like it could get to $82 a barrel. And this is kind of on its climb from the low 70s back up to the mid 80s. And I think a lot of this is driven around the narrative of North American consumers doing a lot of driving and consuming a lot of crude in the summer. So I am a big believer that that is going to lift these crude refining, oil refining stocks as we move into the next quarter in July and August and start hearing the results of that. With crude prices up, and obviously those are the futures that are out 30 days, so we're now into July futures there, but well positioned to make a bit of a comeback. And most of these have a pretty decent dividend. I mean, the one that I love the most, Valero is looking like it's up this morning, and it has a nice healthy dividend at 2.85% if you hold that through the ex-dividend dates, and that pays out quarterly. Then we get down into tech, and tech is been a super strong sector for us. CrowdStrike looking like it's going to make a move back up into the 390s today. Again, a lot of that just being its inclusion in the S&P 500 index. We've got Palo Alto, which looks to be up. Net, which is making a comeback here, which is Cloudflare. Do expect that we're going to get positive earnings out of this company. We saw it dive in the May timeframe and go down into the the mid 60s. Now up almost at 80. I think this stock is going to recover, get back up into the 90s, if not the hundreds, by the end of the year, coming out and closing the year with some positive results. We had an announcement this morning out of AMD that there was a concern over some hacking there and some information that was stolen, but apparently nothing significant to the company. And Cloudflare and CrowdStrike and Palo Alto are companies that help to defend against those types of attacks. We've got Microsoft hitting some all-time highs here. ARM is just a rocket ship up at 174. I am betting that this stock is going to come down and half itself almost. I think it'll be a high $90 stock before the end of the year and then rebound back up into the areas that we're seeing at right now. So I am staying away from ARM based on that that expectation, and we'll see whether that occurs or not. On is terrible right now. It's in the 71 range. This is a stock that really needs the EV market to come back, and I don't think that's going to happen until we get a bit of a cut on interest rates. We have IBM down at 170. This is an interesting stock if you want kind of a tech laggard, but pretty stable in terms of what it does on a quarterly and annual basis. Only 20 times earnings, which is a little high for what it does, but it pays 4%. It has been as high as the 190s this year. If we look at the 6-month chart, it was almost at 200, and that's where it kind of peaked, and now it's come back off of those highs. I think it's got some room to go there. You've got Meta today. I think Meta in the 490 range is a steal. So I'd look at picking up some of that. NVIDIA is still a bit of a rocket ship on the way up there to the 140 range, which is incredible after it's split down to 120. So a $20 gain, that's a $200 gain if you look at that from a 10 times perspective. We've got Google that got hit hard on Tuesday. I think it's going to make a comeback today. Strong buy below 177, even at 177. I think it'll get up to 178, 179 today. And then we've got our financials. So SoFi, I really love SoFi at 642. I think you're not going to go wrong there. It's likely to get to 742 within 45 days. And then JP Morgan, another solid one under $200. If MTB gets under 140, that would be super solid. And then Morgan Stanley and Goldman. Goldman's been on a solid trajectory upwards. It has come back a little bit from time to time, going up to 465, down to 440. If it comes back into the 440 range, I definitely look at acquiring some of that and holding it to a 465, 475 kind of sell point. So that's where we are today. Good luck with your trades. I hope you're liking these videos. If you are, please subscribe to the channel. Leave me a like if there's something and a comment if there's something you